welcome to another Lunch and Learn. I'm Chief Montmany from the Uxbridge Police. How are you all?
Yay!
I don't know if anyone has heard, but since last time I was here, the police department suffered another flood. So last year, right around this time, we had a broken sprinkler pipe that flooded the building. And this year, it happened again. The sprinkler pipe burst in the building and we had water up to our ankles everywhere. So that's what's going on at the police department. Other than that, things are going well. I just wanted to introduce our guest speaker for today. Every time I introduce a guest speaker, I say, "Oh, this is the best speaker we've ever had." But I do that every time, so you don't have to believe it. But today it is truly going to be a treat. We have with us Ruta Convent, who is a longtime Uxbridge resident, and she is employed by Mutual of Omaha, and she's going to tell you about reverse mortgages. It's not a sales pitch. She's just offering you information about the process should any of you desire it, okay? So please welcome Ruta.
Thank you. Thank you. Good afternoon, everyone. I'm going to try not to speak too loudly because usually my own voice would carry the room. But anyway, it's a pleasure to be here. Thank you for coming out on this little gloomy day. I have put in an order for great weather and sunshine for the next week or so watch out for that. But as Chief said, I have been a resident here for 32 years. I actually moved in, was it 3 days? Yeah, 3 days before my one and only daughter was born. So that was a lot of fun. And if any of you remember Chief Creighton, he is a friend of ours. Of course, he's a long time moved out of Uxbridge. He was actually at the house the evening. He said to me, "Ruta, you know, I've delivered 3 babies, but you should probably head to the hospital now." So that kind of got us into the car and off we went. But anyway, it truly is a pleasure to be here. Brings back a lot of memories when my mom was coming down here with my dad, and I think part of helping them age in place was what really drove me to decide to focus on the reverse mortgage or otherwise called as a retirement mortgage. I have been a banker my whole life, 42 years now. Yeah, I did start when I was about 13, anyway, from banking I segued into mortgages. I did mortgages for over 30 years, and then now I am devoting the remainder of my career to helping seniors live the best retirement life they can. With that, I have a brief slideshow presentation, and we're going to just go through some of the facts and some of the misconceptions about reverse mortgage. It's not going to be a super in-depth thing because there are a lot of intricacies about the program, but it's just something to give you some ideas if you do own a home, if you know someone who owns a home, who wants to stay in that home and help finance maybe home health care, or maybe it's just to finance a special trip that they've never been able to take. But the variety of reasons why people would take out a reverse mortgage are as varied as all of us individually. So with that, again, Mutual of Omaha, it is a new company I just went to work for. And it was a tough decision to make. Some of you might have seen the ad before that I was with Fairway Mortgage. And it was hard for me to leave them because I was also leaving my regular business base of helping like first-time buyers and things like that. So I had to make the decision that I was just going to work with seniors. And I think it's the right one for me. So anyway, let's start with the first slide. So when you're considering retirement, or if you are in retirement, you know, there are 3 things that you need to think about. One is longevity. You know, will you have enough money to survive your retirement? This is a definite need in this country, especially. There's a lot of services that seniors still have to pay for out of pocket, and you know, there isn't enough money to go around sometimes. As a matter of fact, 25% of people who retire rely solely on their Social Security check. And it's tough when you have 2 checks coming in and your partner dies, and now you're just left with 1 check. And those are a lot of the clients that I've had in the last couple of years who are now on their own, and you know, they don't necessarily have other assets, but they own their home and they have a lot of equity in that home. And they don't realize that they can tap into that to provide a source of income to help them stay in that home. They think the only solution they have is to move out. And I know it myself, being in my 60s, it'd be tough for me to try to start packing up and moving, although I do think I'm gonna have to be doing that. But I can't even imagine trying to do that in your 70s, 80s, 90s. So I'm all about trying to help you stay in your home if you can. And then also, you know, your lifestyle. Are you gonna have enough money in your retirement to continue to do the things that you enjoy to do? And of course, the liquidity. Some people do have 401ks and things like that, but when they take money from that, it's all taxable. And then that can obviously shrink how much you're getting. When you take money from your reverse mortgage, it's tax-free money. So we're going to talk about how they work and some of the uses that people have had with them. And please bear with me with this PowerPoint. So the benefits of the reverse is that it is low risk. I think, you know, some people think, oh, the bank owns my home, or I'm going to lose my home, and that's not the case. It is a mortgage, just like any other lien on a property. It's just that you have a couple of very simple things you have to do. You have to live there as your primary residence. You have to pay your taxes and your homeowner's insurance, and you have to keep up the home, and that's it. And that's pretty much anything you'd have to do. Even if you didn't have a mortgage, you'd have to be paying your taxes, or the town would take the house. So it's really not any different than just having a regular mortgage or not having a mortgage. But it does give you that additional source of income. You can make payments on it if you wish, and there's no prepayment penalty. So, you know, it does work in that respect, sort of like an equity line of credit, in that you can make payments, but you don't have to in this case. One important aspect is that a lot of people, like I said, they think the bank would own their home, and that's not the case. But what happens is, at the end of the day, when you move out of that property, any equity that remains in that home can go to your heirs. And if for some reason you have exceeded the value of the home, meaning the balance of the loan is higher than the value of what can be, you know, what the home can be sold for, nobody has to pay the difference. So if you've decided to move out and either go to senior housing or whatever, and the house is upside down, you don't have to worry about paying the difference. And that's one of the true unique features of the reverse mortgage versus a regular mortgage. So the most common reason why people will get the reverse is to just eliminate their mortgage payment. 47% of retirees retire with a mortgage payment. So this way, if the mortgage payment, principal and interest is $1,000 a month or $1,500 a month, you can remain in the home and not have to pay that. So now that's additional income that you have every month to spend as you wish. Other people take out the loan just to provide themselves with a line of credit for future use if they need it. So it's sort of like an emergency fund, which is a very common use for the loan. And the last thing is that some people don't realize, but you can actually use a reverse mortgage to purchase your next home. So say you live in a property that's 2-story, your bedroom's upstairs, but you really should be moving into a ranch. Or maybe you want to move into a condo so that you don't have to do all the maintenance yourself. You can actually take some of the cash from the sale of your home, use it as a down payment, and then get a reverse mortgage for the difference. And this way you don't have to spend all of the proceeds from the sale of your home for the next property. You get to keep some money in the bank for yourself, which is great. I think that's, definitely a source of comfort. I know if you can look at a bank account and see that you have some money in there instead of, zeroing it out every month, right? So again, the uses for the reverse are multiple. You can use it to pay off debt. You can use it to go on a trip. You can use it to help your family. Maybe somebody in your family, needs to buy a home and you have the means and the ability to help them with a down payment, or help with education costs. A lot of people would rather see their children and grandchildren use the money that they were planning on leaving for them while they're alive, instead of waiting for them to, inherit it upon their death. So what is a reverse mortgage? We call it, the HECM is the home equity conversion mortgage, and that is one of the multiple types of reverse mortgages, but it is the most common one, and that's the one that we'll focus on the most right now. So it's a unique loan that's only available to people who are 62 and older. So if you're 50 years old, sorry, can't get it. You do have to be 62 or older. And if you have a spouse who's younger than 62, that is something that can be done. We can work with that. If you have a trust on your house, whether it's a revocable or irrevocable trust, we can do that. If you have a life estate on the home, we can do that. Now again, the documents have to be reviewed, but in most cases, there are ways to do it even with an irrevocable trust. And I think that's huge. So, as we said, the eligibility is being 62 or older, and you are responsible to pay the taxes, insurance, and keep up the home. And also, most importantly, live in that home as your primary residence. We determine how much money you can get based on how much the home is worth, what your age is, or the age of the youngest borrower on the loan, and what the current interest rates are. So those 3 factors will go into determining how much you can get. Our primary goal in dispersing the funds is that any liens on the property do have to be paid off first. So if there's a mortgage on it, or if you have a tax lien on the property or anything like that, that has to be paid off at closing from proceeds on the loan. And then whatever might be left is yours to use as a line of credit or use for other purposes. The way you can get the money is a variety. You can either get a lump sum at closing. You can set it up as an annuity, basically figuring out expected life expectancy, and your current age is calculated in, along with the amount of your available line of credit, and you might be able to get an additional check every month. Might be $500 a month, might be $1,000 a month. It's all dependent on those other factors that we talked about. And then the other way to do it is just to have the line of credit established. There are a lot of consumer safeguards in place right now that, the bank doesn't take your home. It's a non-recourse loan if you owe more than the house is worth. There are protections in place to make sure that after the closing on the loan, you do have enough income coming in to be able to pay your taxes and insurance. Because no bank wants to take away your home. And this is something that changed along the way. It used to be that you could just get the loan based on your age and the value of your home, and nobody looked to see what kind of income did you have coming in every month. So people would get their money, get it all spent within a year or two, but then not have the means to pay the taxes and insurance. And then those homes ended up being put into foreclosure. So that doesn't happen anymore because we do verify your income before we can do the mortgage. One of the other safeguards is that you do have to go through a consumer counseling session. Now this right now is available in Massachusetts over the phone, and it's just a third-party counselor that will sit down with you over the phone and review the program, make sure that you understand what you're getting into, and that you understand how it works, and that you're comfortable with it. So nobody can, pull the wool over your eyes and say that, you didn't know what was happening and that kind of thing. So education is vital in this program. These we're going to go through pretty quickly. These are the myths of a reverse mortgage. How many of you have heard of the term reverse mortgage in the past? Okay. How many of you have heard good things about a reverse mortgage? How many of you have heard bad things about a reverse mortgage? Okay. So chances are those bad things that you had heard were stemming from misconceptions about the program, but also loans that were actually taken out 20, 30 years ago. And like I said, the program has changed. So we call this the new reverse mortgage, and it's because guidelines have been changed on the program. The amount of money you can get has been adjusted. People no longer get as much of the equity on their home that they used to, and that provides you with that cushion of equity. Should you decide to sell the house and move out, you have money in most cases to go ahead and take with you. The first myth, and we talked about, that the lender owns the home. That's not true. It's a lien on your property, and you continue to own the property. It's just a mortgage. The other myth is that the funds that you get from that equity are taxed. That's not true. This is your own equity. It's your, because it's proceeds from a loan, the money that you pulled from that reverse mortgage are not taxed. It says that the reverse mortgages can be risky and that the funds aren't guaranteed if something happens to the lender. As you know, there have been bank closings in the past. We've all lived through, a lot of the ups and downs in the banking system. But this mortgage is actually insured by the government. So it's an FHA insured loan. And that protects the fact that no one's ever going to call in the loan. Nobody's going to force you to make payment on it or pay it off in full. The other myth is that you might end up owing more than the house is worth. There again, we call this a non-recourse feature, and that means that you can never owe more than the home is worth. So the other one is that that when the reverse mortgage becomes due, because you have moved out of the house or permanently left the home, that the lender's going to take the house and sell it on you and your heirs don't get anything. And that's not the case. When you've moved out of the home permanently, the loan has to be paid off. And we work with either you or the heirs to give you payoffs, and you can sell the property, you can pay your realtor, and then whatever is left, you will end up getting, or your heirs will end up getting.
That'd be one of
The other myth, that you outlive your life expectancy. You know, last year I actually did a reverse mortgage on a woman who was 104 years old. And nobody can believe that story. They're like 104. And I went to her home. She was as smart as a whip. She knew everything that was going on. And she had round-the-clock home health care. So she needed the money to continue to pay for that because she didn't want to move out of her home. And, you know, it gave me such a great feeling at the end of the day to know that I helped her to be able to stay in her home and, you know, live with dignity, not have to rely on anybody, and enjoy her surroundings the way she wanted to live. So that was very special. That you can never get out of a reverse mortgage. Now that's an interesting concept. Of course you can get out of it. You can get out of it by paying off whatever is due on the loan, because it is just a loan. The big difference is that nobody's gonna demand a payment from you. So I guess that's why people think that, oh, you know, they don't really own the home because nobody's asking them for a payment. All we're doing is we're working with the assets you have. And you know, when you own a home and you have equity in the home, if you're not doing anything with it, we call that in the banking world a non-performing asset. And, you know, it's something that people overlook, and it doesn't have to be the case. You can certainly use the equity in your home. You can use it to enhance your lifestyle, help family, live the life or the retirement that you want to live, without any risk that you're going to get kicked out of your house or that someone's going to take it away. The other myth is a reverse mortgage can impact your Social Security or Medicare benefits. That is not the case. We do recommend that you talk to an estate attorney if you're on any kind of state aid, because there are intricacies as far as that goes, but your Medicare and your Social Security are not affected. Okay, so since 2009, reverse mortgages have been able to be used to purchase a home. And you know, a lot of people in our age group, we say we're going to be downsizing. Well, that's not necessarily the case. Not everybody buys a smaller home, but what they do is they right size. So it's really just a question of finding the home that's going to fit your lifestyle, whether it's to move into an over 55 community, whether it's to move into a regular, any condo so that you don't have to do the maintenance, or whether it's just to move to a ranch home where everything is on one level. So, as I had said before, you can make a down payment on a home and then supplement the balance of that purchase price with a reverse mortgage so that you can actually get into the home you really want and do it without necessarily using up all of your savings. So as far as finding out how much you're eligible for a reverse or you know, getting a quote on your numbers, and seeing what terms are available to you, that would be something that would be best done on a one-on-one situation, because, as I said before, everybody is different, everybody's situation is different. So we do sit down, we spend a lot of time educating our clients to find out exactly what they can do. But I also encourage you, if you're just even curious about it, I mean, this is why I'm here, is to educate you, not try to sell you on it, but to educate you and make you aware that this product exists. If there's a need or a desire to learn more about it, I'm available, and that's it. So, for any additional information, I think most of you have flyers from me. You know, my phone number's on there, my email. Feel free to give me a call, and I'd be happy to either come out to your house, or I could probably meet with you here, and we could go over more details for you. Or if you know of anybody that might be interested, I encourage you to just pass my name and number along. Do we have any questions so far? I know it was kind of tough at the end getting dropped on that, but nothing? Yes, Jean?
Do couples qualify too, or it have to be an individual?
Nope, it's absolutely couples. We do base it on the younger of the two, homeowners, on the home. And, a lot of times people who haven't retired yet, they'll talk to us about, hey, I'm thinking, I want to retire in 5 or 10 years or whatever, and, they'll talk to financial advisors to try to set up all of their funds, etc. But they'll also, use the information that can be provided on what a reverse can do and let them incorporate that in their retirement planning. So it's becoming a huge thing. Matter of fact, this year, every day, 10,000 people in this country are turning 65. And by the year 2030, all the baby boomers will be, will have retired. So our demographic is certainly changing, and like I said, my goal is to just try to help people live the best retirement they can, live in the home they want to live in, live with dignity and the ability to not have to rely on other people for their support. So I thank you for your attention and your time, and